Welcome back to my daily report market analysis videos with me, Richard, market analyst at Hantec on Thursday, 27th of February, looking at dollar yen, which has been flying around actually in the last few sessions. I mean, it had this sharp run higher last week as pressure on the yen was seen amidst fears of how the coronavirus was going to impact the Japanese economy. We've had this sharp correction now in the last few sessions as sort of focus has turned away from Japan more towards the US. And yesterday we saw that the case in California has sharpened the emphasis of that move, and the dollar's suffered a little bit overnight as a result, although just rebounding again in the last couple of hours. But it certainly makes it a very difficult call on dollar yen at the moment because the volatility we're seeing is quite elevated and still pretty high. The average true range at 68 pips I see now is at 5-month highs, well above the 60 level that had basically been high of the last 4 months. So sort of elevating on a daily basis. So it is suggesting that the volatility is still very much in the price and trading sort of around that 110 big figure area. Dollar yen, it's sort of there or thereabouts, sort of middle of the road, I suppose, because I think if you lost that support of 110, 109.50, I'll put the crosshair around that point, 109.50, which again was an old breakout but became supportive through February. If you lose that, then you do turn corrective, really. So the market is sort of in this no man's land zone at the moment of consolidation, edging a little touch lower on RSI. If you saw that decisively below 50, then again that would be corrective. Look at those MACD lines, are they crossing over? Seemingly yes they are, and also the stochastics are continuing to fall. So it's a very choppy outlook on dollar yen at the moment, little real decisiveness. I mean, there is this corrective aspect to the near-term move, and the little pickup back to that downtrend may well give you an opportunity again, or give an opportunity again for how this goes. But yeah, I mean the RSI failing around the 60 point now, so you'd say that is still corrective, and the MACD line's falling over around neutral. Again, still a corrective bias on the near-term basis, but it's it's an interesting basis of support we've seen in the last hour or so, and holding on to that support, today's low 109.85. So if you start to see the market back above yesterday's high, for example, 110.70, that is the first real resistance, then that really would start to engage a recovery again. But for now, we're still subdued and looking on a near-term negative bias. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.